morning to you all. Bit cooler. Yeah, don't mind that. It's been quite hot the last few days. We're not good at coping with hot. We're not good at coping with cold. We're not good at coping with wet. I don't know what we're good at coping. We're Goldilocks, not too hot, not too cold. Anyway, Stuart, Mike, thanks very much for that session. Listen, please do ask me any questions that you feel sometimes these markets aren't always that clear, may confuse you. Very happy to explain anything, or there are no silly questions. There seriously aren't, because we at TrendSignal sometimes can assume a little bit too much. We sometimes use a lot of the sort of market speak, which is full of mnemonics and letters and numbers and stuff, which sometimes doesn't always inform particularly well. So please make sure you do ask any questions. Anyway, as soon as you do, I'll read them out and I'll try and explain or try to educate you. That's always. Biden, Michael, my view. Well, I think it's a surprise, but it's not a surprise. It's a surprise that he chose to do it while still suffering from COVID. You'd think he'd want to do it and just sort of make the announcement midweek. I think it throws the whole election into more uncertainty. I think the markets were getting a bit comfortable with Trump, the Trump trade in the bond markets. He's very much a fan of intervention, trade tariffs, cutting taxes, Mr. Trump, which actually wouldn't be good for inflation and wouldn't be good for bonds. And that's partly the way hedge funds have been positioning themselves increasingly over the last few weeks. But I think Kamala Harris, she's quite a, she's more sprightly than both of them. What you've got to remember is Biden's 81. Yes, I know he would have been the oldest president ever. But if Trump succeeds in winning the presidential election, he will be the oldest president ever. It is extraordinary. But he is certainly, he believes in his own hype, Mr. Trump, which is extraordinary. More importantly, some of his fervent followers believe in his own hype as well. Anyway, it's had an effect on our markets. If you recall last week, Trump said that Taiwan should pay for its own defense because Taiwan had basically stolen business from the US semiconductor sector. And that had quite an effect on the markets. Already, the likes of Nvidia, one of the big mega cap stocks, had been not in trouble, had started to lose ground. I've got a chart somewhere. Yeah, this is Nvidia. So you can see it actually started the previous Thursday, and that was on the back of the inflation data that came out in the US. And you think, well, hang on a second, if inflation is lower than expected, and which means interest rates are going to be up, why on earth would a stock like Nvidia fall on the back of it? Anyway, it's down to the fact that these mega companies, unlike a lot of tech companies that have got quite large debts, because that's how they fund their growth and development, these large tech companies, these mega caps, they've got they've got hundreds of billions of dollars. So in fact, this is what kicked it all off, was the fact that interest rates are going to be cut, and it was becoming a near certainty in September, which would immediately cut the revenue generated certainly from their cash pile at Nvidia and Apple and Amazon and Microsoft. Ian, what does the news affect the market so much, sometimes in the opposite? How much is market manipulation, i.e. banks using it as an excuse to move the markets without the finger pointing for manipulation? Well, to be honest, these days, there's not much of that at all, Ian. There's a lot of regulations that prevent the circulation of sensitive information. A lot of what goes on, remember, markets do not go up in just a straight line. They breathe in and breathe out. They go up, they come down, they go up, they come down, they go up, they come down. So this is all part of the adjustment, or the way market traders, analysts, economists are all putting in their Tuppenny Halfpenny's worth as to what's driving these markets up and down. This actually happens to be a chart of the Nasdaq. It could be anything. It could be sterling against the dollar. It could be oil. But we depend on the free flow of information. Yes, there are some institutions that have their own research and will position their own trading ahead of the publication of it. But you don't have to read and listen to what they're saying. Often you'll get institutions that are talking their own book. I noticed last week, ironically, having looked at Nvidia, Ian, which has come off quite sharply, that's fallen 14% at one stage from its high. That's over $400 billion, by the way. But there was a quite a serious asset manager last week. I can't remember his name now. Anyway, he said that in the next 10 years, he could see Nvidia hitting $50 trillion valuation. And it's stuff like that. And I just think, really? I mean, we just got used to Nvidia, which was worth 200 billion back in the start of last year. What, 50 trillion? I mean, I do think there's more legs to this than crypto. This is real world stuff, and I use AI. I really do. I help it designs things for me. We use it quite a bit, and it's got practical uses. I think they need to be refined, and I'm sure the likes of Microsoft are embedding AI into Word and Excel. We'll be charging more for it. I'm sure that's their justification. Rajiv, can you please also check what is happening in the NAS 100 and Nikkei? So that's the JPN 225. It's like 88 and can go down, so it's going further down, or you think it will retrace back. Rajiv, I don't like to tell you my views because my view is just one view. I can tell you what the charts are saying. So clearly, what's happening in Japan, this is the Nikkei 225. It's called the JPN 225, and it's retreating fast, but it had rallied significantly. So maybe the thing to do is to look at the longer term charts, because you can see the weekly and the monthly are still up. And this is all down to the US dollar versus the yen. This is the idea that the Bank of Japan might be pushed into raising rates again, only very modestly. But there's also the threat of intervention by the Bank of Japan to sell the dollar and buy the yen, because the yen has depreciated significantly over the last couple of years. You can see where it was. Oops. I'm just showing you a monthly chart, but oops. Let's do that again. Didn't do that. Didn't work out. Okay, this is a monthly chart of the yen, Ian. So you go back to 2021, it's at 103. It's now at 156 and was above 160. Sorry, that was Rajiv. I do apologize. But the yen is way undervalued, and this is down to this ultra loose monetary policy that the Bank of Japan continues to pursue in the face of rising inflation. But the irony is inflation has now been falling in Japan. But I do think that the genie is a bit out the bottle, and the Bank of Japan is got one eye on the weakness in the yen, and the weakness in the yen, as I said, has driven the Nikkei. So we're back to the Nikkei now, or the JPN 225. So that's really what's going on there. Same thing really with the Nasdaq. I mean, the Nasdaq really has fallen significantly because of the mega caps that have fallen. We've just been looking at Nvidia, that's lost 400 billion. Has a big effect. It's responsible for 36% of the gains in the S&P 500 this year. So not surprisingly, the S&P 500 has come off as well. Yeah. Obviously, this Biden news is going to have a significant impact on the markets, and we're not going to know the full effect. Looking at it now, stock futures are up at the moment. You got to wait until 2:30 this afternoon for the real reaction. I definitely think. Ian, same as the Tesla charts, look like Tesla stock is bad, but all the news are positive about Tesla. Well, that's really interesting you say that. I mean, the news about Nvidia is not negative at all. It's like, okay, so TMSC, this is this the chip stock in Taiwan, and part of the things that happened last week, the Nasdaq slumped 4%. Let's put the Nasdaq up. This is the Nas. So the Nasdaq slumped 4% last week, and it's basically investors rushed out of all the mega caps. So you know what we mean by the mega caps? We're talking about the Magnificent Seven, the likes of Nvidia, Amazon, Apple, Microsoft, Tesla. There's 7 of them, and then they're just worth so much money, especially the likes of Nvidia. But it was worth 3.3 trillion. It's only worth 2.9 trillion now. Anyway, but there has been a move out of mega cap stocks and into smaller cap stocks, and that's into something called the Russell 2000. So the Russell 2000 is a stock index. We haven't got it on here. Not sure whether we can get it. No, we can't get it. It's not included in this price feed. But the Russell 2000 is an index of the 2,000 small cap stocks up to a certain capitalization. And they've basically been unloved really throughout, well, certainly last year and all of this year up until now, while mega stocks have all surged. We know what's been going on. Nvidia, as I said, is just even it went up by a factor of 10 last year, and then it's already up 176% this year. So it's all nuts. Or is it nuts? Anyway, the catalysts for the recent move, or one of the catalysts, Nvidia had already started to fall. The tech stocks had already started to fall with the realization that interest rates are definitely going to be cut in September. But Trump also made this comment, which acted as another catalyst for these stocks when he suggested that Taiwan had been stealing America's semiconductor business and that it should pay the US for the defense of its country. And I think this sort of sounded alarm bells, and the Chinese stock market shuddered, and I think there were some notable fallers, and amongst them was this stock called TMSC, Taiwan Semiconductor Company. I don't know what the M stands for. Anyway, it's a chip manufacturer, and it supplies chips to Nvidia amongst others, and also Apple. And TMSC is Asia's most valuable listed company. And really, like Nvidia, it surged over the past year on the back of the AI boom. Anyway, the mood, it caused TMSC to fall, I don't know, 2-3%, and the mood quickly spilled over into the US, with the US semiconductor and the Nasdaq, broad Nasdaq, and the S&P really suffering significant losses. And it was Wednesday last week. Yeah, that's where the candle is. So Wednesday last week, when the Nasdaq posted its largest one-day fall since December 22. Yeah. So over the week, I think the Nasdaq lost just under 4%, which is one of its biggest weekly falls. Okay, only going back to April, but if you go back if you look back further than that, you have to go back a long way. Yeah. So lots going on, and it's really been referred to, this move out of the mega caps into the Russell 2000, as a violent rotation. That's why everyone loves to give these things names, like the Magnificent Seven. Okay, Ian, I want to do a sip, but it's so scary how the stocks are unpredictable, like 2022. So, and was so bad, it wasn't worth investing. Yeah, do you know what? I think you just have to. This is the problem being a fund manager, Ian. I mean, you've got the same dilemma. I mean, I'm 65, and I'm not sure what age you are, but I mean, my IFA keeps telling me I've got to keep more in cash, but I'm quite invested. But when you do it, you're okay. You're not far behind in. You have to embrace the fact that these companies are a big chunk of the index, and you have to basically, if you're not in it, then you're not in it. And had you not been in the mega caps this year at the beginning of the year saying they were overvalued, you wouldn't have seen any gains at all, maybe 2-3%. Yeah, so some of the best ways of trading the markets is just to follow an all US or world index. My investments are all quite broad based, but they are mostly in equities. I don't have so much in bonds. That wasn't such a great year last year for that 60-40 split, was it? Yeah, it is scary. I agree. Yeah. Anyway, the mood has shifted, as I say. Everyone's moving into, well, they're not moving into small caps, but the Russell 2000 gained 12% over the last 10 days. And the gains in the Russell 2000, unlike the NASDAQ and S&P, they're pretty broad-based, because the NASDAQ and S&P, most of the gains were down to these 7 stocks over the last year. But in the Russell 2000, 3/4 of all the components of the 2000 index, so that's 1,500 shares, have all risen over the last week. Yeah, you got 10 more years to go in. You'll be fine. But this is a great time to invest. I was telling my kids, I've got 3 daughters, over the last 20 years, this has been a massive game changer. It's like a mini industrial revolution or technology revolution. The increase in productivity, the output, the increase in wealth is huge. My generation tend to say, oh, it's not so great for our kids working. They don't have so many opportunities. There are lots of opportunities. There are. I wish I was 25 over again for lots of reasons. Anyway, talking of Trump, we've been talking of Trump. The prospect of a Trump victory in the election, when is it, on the 5th of November, it spurred this thing called the Trump trade. And it's something that I find quite interesting, because the Trump trade almost flies in the face of what's been happening with this rotation out of the mega caps into the Russell 2000, because the Trump trade is based on the prospect of trade tariffs, because that's Trump all over. He wants to impose trade tariffs. He wants to make America great again. He wants to do this, that, and the other, and he wants to cut taxes at the same time. So in the event of a Trump victory, traders expect his plans will lead to higher inflation and an increase in the supply of longer dated bonds to fill the hole created by these tax cuts. Anyway, the Trump trade could well suffer. I suppose in the light of what's happened with Biden pulling out, there may be more uncertainty about that. And I think the polls over the next 2 weeks will determine if these Trump trades have further to go. But it's not lost on me the fact that Trump's actions, his tax cutting agenda and his tariffs are inflationary, which is something that would benefit mega caps. But for now, that's not happening. And the Federal Reserve are looking to cut rates. Talk about confusing, eh? But at least you know. Bond traders tend to just live in their own world compared to equity traders. And bonds aren't really traded by retail customers anyway. Question about UK. Yeah, well, not really much to report on the UK markets. We've had this election and it's sort of been a bit flat, hasn't it? Yeah. So UK markets sort of treading water. Principle being more and more fresh money going into stocks now, like Bitcoin, lots more new fresh investment from institutions. So hopefully showing a more steady line growth rather than big fluctuations. Yeah, I think that the problem with what's happening, certainly year to date, is the market breadth. So there aren't enough stocks that have rallied to support this, which basically means we rely on these mega caps for the continued performance in the S&P 500 and the NASDAQ 100, which is, a problem. China objectives by 2030. Well, China, this is a question by Michael. I forgot to mention at the beginning of this that China actually has cut interest rates overnight. The People's Bank of China actually cut their 1- and 5-year loan rates by 10 basis points. And that's to stimulate the economy, but they should have cut more. And it's the first cut in a year. And it's sort of, it's begrudging in some sort of way, but they got one eye on the weakness of the renminbi maybe. But China's definitely focusing on technology rather than just manufacturing now. And I think Trump, this is one of the reasons why Trump may, win this election, because he's determined to fight China tooth and nail. He said Russia's just a distraction. He wants to give up on Ukraine and forget Russia and focus on China. And a lot of his followers believe him. That's really it. Where were we? Okay, yeah. Someone asked about the UK markets. I'm just saying that there's nothing much going on. This is the chart of the FTSE 100 on the screen. I think the new Labour administration obviously is finding its feet, and already there are signs that Labour's considering above inflation pay awards. Where was that? Yeah, here we go. No, UK. Yeah, so this is Rachel Reeves' picture of the Chancellor hinting at above inflation pay deals for teachers and nurses. You see, I can sort of understand that. That's who their supporters are, and above inflation pay awards, they've actually been recommended by this independent pay review body, and there are nearly 2 million teachers and NHS workers, and this group, the Institute of Fiscal Studies, said that if wages were increased by 5.5%, which is what this pay review body is suggesting, with inflation at 2%, the government will need to either raise taxes or cut spending. There you go. And I think the pressure is going to mount on the government because there are other pay reviews being considered at the moment as well, for police officers, for prison staff, for the armed forces, and also for civil servants. Anyway, there's going to be a lot of bumps in the road for the Labour Party, but you just think the Labour Party backers at some stage are going to want their pound of flesh. Yes, Ian, they've been talking about dropping interest rates all the time. This is in the US, that's right. And just so you know, to be very, very, very clear, there's a meeting at the end of the month. Oh, what's gone on there? This is my FedWatch tool. Yeah, okay, so this is the end of the month. On July the 31st is the next meeting. There's going to be no cut in rates then, but September the 18th, so there's not one in August. It's a bit of a holiday for the Federal Reserve. But then by September the 18th, when the next meeting happens, there's pretty much a 96% probability of a rate cut. So when you add up the probability of a half a point cut of 4.5, 91.7 of a quarter point cut, there is definitely, according to this, going to be a rate cut. Yeah. Oh, I see. In Japan. Yeah. Well, they're not going to be cutting interest rates in Japan. The Bank of Japan had increased rates by 10 basis points in, and that's one of the reasons why the Japanese yen has been rallying, and also the threat of intervention is the reason why the yen's rallying, which has affected the Nikkei, the Japan 225. Yeah, that's right. Anyway, well, there we go. There's US interest rates. It's important you all keep abreast of that as well. Yeah. China education restrictive. I'm not sure what you mean by that, Michael. Anyway, I've been asked about the dollar. There's not much movement in foreign exchange markets last week. The euro, sort of plus minus nothing really. Sterling a little bit weaker. I mean, it has been doing really well. Went above 130. Yeah. Down 0.75% last week, but nothing much. No, the big movements were in commodities. Again, oil all over the place, certainly falling, and falling a little bit from the opening this morning as well. But Friday, we fell a couple of bucks, one of the biggest daily falls for quite some time, a fall of 3.5% on the week. And again, it's China. China being the largest global oil importer, and their economy still struggling. And if I look at this calendar, and that's one of the reasons why they cut rates, obviously, but if you look at last week's data, do you remember we talked about the GDP data? And that's coming in quite a lot lower than expected. And that's one of the reasons why oil has struggled. So the combination of China's economic challenges, I think, along with Europe's pretty tepid growth and, a US economy that is waiting for this presidential election where growth is definitely a lot cooler than it was in the fourth quarter last year. Gary, what was the chart showing USA interest rate projections? Thanks. Gary, this is really helpful. So this is called if you want to Google the CME Fed Watch. So the CME Fed Watch, it's from the CME group, the Chicago Mercantile Exchange Group. It's a huge group that owns all these exchanges, online exchanges, and their forward contracts basically allow the CME to let us know what the projections are, the forward rate trades, what they are saying about future interest rates. And it fluctuates all the time, but it's what you got to remember is it's fluctuating every second of the day. What the Federal Reserve aren't doing is telling us what they're thinking every second of the day. We have to hear from them occasionally when they make speeches during the week, and also when they let us know through their meetings, which are held. Well, you can see the dates here: 31st of July, 18th of September, 7th of November, and then 18th of December. So just remember, the current rate is at 5.25 to 5.5, and if the rate is going to be at 5 to 5.25, that means in September they're going to be cutting rates by 0.25%. Yeah. Ian, what's your view on just dollar cost averaging into S&P? As Warren Buffett always says, can I tell you something? I put money into my pension and my wife puts money into her pension every month. I never do big lump payments into it, except at the end of the year if I've got some surplus to put in. But typically, I always just drip it in every month. And I don't care the one market's going up or down or sideways. And it just gives a better. I'm not a financial advisor, by the way, and you need to get the advice from your own financial advisor. But I just think it's a sensible way of investing. You're not reliant on picking the right time. No, that's right. No, thank you, Ian. I'm definitely not a financial advisor, and I should make that very clear. Anyway, so oil. Well, we talked about oil. It's not ideal with China not functioning, with Europe, especially Germany, not putting its weight anymore, which is really holding back Eurozone growth. And ironically, here in the UK, we're certainly our last month-on-month GDP data was a lot better than expected, plus 0.4% rather than plus 0.2%. Nothing like China's 4.7, nothing like the US's 3.4 in Q4 last year. But it's better than it was, and we're not shrinking our economy. And look what Labour's inherited. Let's hope they make a good fist of it. Yeah. Okay, calendar this week. Let's start on the right week, always helps. So we've already had the China data out, the 1 in 5 year loan rates cut by 10 basis points. 10 basis points means 0.1%, basically, 100 basis points and 1%. The first cut in a year. Little impact, really, because you could say that it's just going to prolong the agony in the retail sector. And in a way, the economy needs a greater cut than 0.1%. And I think the Chinese are just so reluctant to do it, and they're just focusing on technology at the moment. They're prepared to suffer low growth in the short term. Yeah. Nothing on Tuesday. Then we got all this manufacturing and service sector data. So an economy basically is made up of two sectors, manufacturing and services. In the developed world, which is where we are, and in the US and then rest of Europe and in China, in Japan, most of our economy is made up of services. Especially in the UK, our services account for about 80% of our GDP. So our manufacturing base is very small. It's bigger in the US, it's bigger in Europe, especially Germany, but it is still smaller than the services sector. Anyway, just cut a long story short, it's a measure of the performance of both sectors. Manufacturing, as I say, is typically much smaller than the services sector in the developed world. We're expecting modest improvements, a slight uptick in both sectors in the Eurozone, in the UK, with the one exception being slightly lower expectations for services in the US, and that's in the afternoon on Wednesday. So if you look at flash services, so we're expecting 54.5 versus 55.3, but 55.3 was actually revised up from 55.1. And you get these revisions, so to be careful of that. BoC rate decision, significant this time. So, sorry, Bank of Canada is what BoC stands for. We're expecting a rate cut of 25 basis points from 4.75 to 4.5. Yippee doodahs. And this follows on from better than expected inflation data that was released last week. Not something I normally focus on because Canada is not so important. It's its neighbor, the US, which drives global capital markets. Anyway, please be careful though, because the Canadian dollar will be very sensitive to this. So any Canadian dollar pairs, sterling CAD, euro CAD, whatever you're trading, dollar CAD, just remember you may want to protect those positions, especially if you're doing any short-term trading there. But longer-term stuff, we tend to leave them on. But there could be a move mid-afternoon on Wednesday. We then jump to Thursday. We got this German IFO business climate survey. I've followed this for years and years and years, and it's quite interesting because it's a very large survey. It used to be more important, but Germany just seems to be the laggard in the Eurozone. It's weird. But it is a large survey of manufacturers and builders and retailers. But there's little change expected here, as the German economy really continues to underperform. The euro will be sensitive to that, though, if there is an outlier move, as it were. So if it's a lot higher or a lot lower than what was expected, but that comes out at 9 a.m. on Thursday. We then have something called this the advanced GDP quarter-on-quarter data. So this is for the second quarter, or Q2 as it's referred to. So that's the period from April through to June, April, May and June. I also think it's amazing that they managed to produce any data about the value of all the goods and services produced 20 days or 18 business days after the end of the quarter. There are 3 readings. The first one is called the advance. The next one is called the prelim. You think prelim might come before advance. Anyway, it's advanced, prelim, and then final. So this is the first reading, slightly stronger than Q1. The final Q1 data was lowered from 1.6 to 1.4%, a lot lower than the fourth quarter in the end of last year, 2023, when GDP in the States was 3.4%. Imagine having that in Europe or in the UK. Extraordinary. Anyway, it doesn't tend to elicit much reaction. Although it's the first reading, it might, especially if it's wildly away from this forecast. But just remember, this is looking back. It's telling us what happened in April, May and June. We want to know what's going to happen, not what has happened. So we like looking at leading indicators. That's what gives us a better clue. Consumer sentiment reading is great. Inflation data is good as well. That tells us that interest rates might be going up or down. So that's something we really look at. Talking of which, with the final bit of data I want to look at is this core PCE price index. So this is the personal consumption expenditure. It's something that attendees in our webinars have to get used to hearing about, reading about, because this is the preferred measure of inflation, unlike the regular data, which is produced by the Bureau of Statistics, like our ONS here in the UK. That's the CPI. But the Federal Reserve, they look at the core PCE price index. So of course, this now is really important to the markets, because basically, if that's stronger or weaker than expected, then that's going to influence the Federal Reserve in whether they cut rates by how much. So that's something that which will really drive the market. So 1:30 on Friday, just when you're expecting another quiet day, maybe it could be quite choppy, but I would definitely put that in your calendar, 1:30 Friday afternoon. Oh, and inflation could tick up a little bit. That's all. Could tick up a little bit. And then finally, this revised University of Michigan consumer sentiment. This is it's the revision. It doesn't tend to get revised, and I said this the other week, and lo and behold, it was revised. But consumer sentiment is a great leading indicator. It tells us what's going to happen in the future. If consumers are happy, they spend more. If they spend more, the companies that are seeing increased demand for their products and services tend to do better. It's as simple as that. So, unlike some indicators, I do think this should be high impact, but for some reason, Forex Factory give it a medium impact. There you have it. G20 meetings is the top 20 economies roughly in the world. I think they're all meeting in Bali this year. It sounds like a holiday to me. It's a massive talking shop. I'm not sure it achieves a whole heap. I suppose it's good for economists and officials to meet and discuss things, but I don't think there are too many people there to agree on anything. As I said, I think it's just a big talking shop. There we go. There you have it. Lots more news to come out about Biden and Kamala Harris and her support that she's garnering, etc., and how that's going to affect the outcome of the election. So could be an interesting week. But listen, thanks very much for attending, and enjoy the rest of the week. We'll do it all over again next Monday. Yeah.